What's up? What's up? What's up, my mind your money business people? I'm a little late, I know, right? Um, but I'm giving a review on Friday's stock market, and also I want to talk about the September effect when it comes to the stock market. But what makes this month of September different from all the rest, right? So the stock market, as you can see by the title, Dow hits fresh record, right? Stocks close out strong week as inflation cools. So let's see what the stock market did on Friday. Stocks traded mixed on Friday, but closed the week on a high as investors embraced an inflation report seen as crucial to the Federal Reserve next decision on rate cuts. Now, the next meeting that the Feds plan to have is in November. There may be a possible rate cut in November, and then they're meeting again in December, and there may be another interest rate cut. And the economists are saying there may be a 25 basis point cut on both, coming from both of those meetings. So who knows? The article goes on to say the Dow Jones Industrial Average gained 0.3% and finished with a fresh record. The S&P 500 lost 0.1%, but is coming off a record high close from the prior session. Meanwhile, the tech-heavy NASDAQ composite sank about 0.4%. And I saw that, sank in my portfolio when it came to my pretty much everything. Even though the Dow rose, which is not normal for the month of September, I still took a loss in my portfolio because of the investments that I am investing in, right? But it comes with the territory. It's okay. Okay, despite the mixed trading on Friday, the stock gouges are all recorded wins for the week. So it's not about just the day, it's about the week. And I will say that I gained for the week. After confidence in the economy returned to the market, the Dow and the S&P added about 0.7%, while the NASDAQ rose 1%. That's big. A solid GDP reading combined with continued cooling in inflation has cemented growing conviction that the Fed can nail a soft landing as it embarks on a rate cut campaign. These rate cuts are very important, people. These rate cuts allow money to be borrowed at a cheaper rate. It allows companies to borrow money and also hire employees. When rates are high and the companies having to pay back these high interest loans that they borrowed from banks to grow their company, they're not going to hire as many people. But when they can borrow money at a cheaper rate, they can invest more money into their employees and hire the workforce needed to expand the business. So remember that. Okay, the August reading of the personal consumption expenditure index, which just came out, the inflation metric favored by the Fed showed continued cooling in price pressures. That is a good thing for those of us that are investing in the stock market. The core PCE index, the personal consumption expenditure, which is mostly closely watched by policymakers, those that are creating the policy. I'm having a little drink here. I just came back from the gym, and I'm relaxing, and I told myself, go ahead and do this video since I didn't do it on yesterday because I was procrastinating. Water's important. I try to drink 7 of these or more a day, at least 7. I'm a little behind today, but either way, the core PCE, which is mostly close watch, I already read that, by policymakers, rose 0.1% month over month, lower than Wall Street forecast. When they talk about these investors and how they might have pulled back in the stock market, like they're not talking about me because I don't do pullbacks in the market. I do dollar cost averaging every month, right? So yeah, they're talking about Wall Street. The PCE reading appeared to goose up bets on another jumbo-sized rate cut from the Fed next month. More than half traders, around 52%, now expect 50 basis point cut. Now, even though they are expecting 50 basis point cut, I can see the Feds doing only a 25 basis cut. And then once a 25 basis cut happens, if it happens, right, then you're going to see the prices in stocks drop. You know, because just because the Feds gave a 50 basis point cut this time doesn't mean that they're going to give a 50 basis point cut in November. And then also November is the election month, so who knows how things are going to go. But it is what it is. Elsewhere, China added to its stream of stimulus measures, boosting markets once again. Mainland stocks scored their biggest weekly gain since 2008, people. They're saying we've scored the biggest weekly gains or wins since 2008. And the luxury stocks are set for their best week in years as hopes for Chinese demand rise. Interesting. And that's pretty much all of that's pretty much it when it comes to the market review. It wasn't a whole lot, but FTEC went down on Friday. It closed $1.38 lower than the previous day, than Thursday. VTSAX closed 9 cents. That's why VTSAX, or an S&P 500 mutual fund, index fund, ETF, is a very safe investment because the money and those bonds, well, not bonds, but those stocks, they're packaged with more than one company. And they're not just a single stock like Apple or Nvidia, right? Like, again, VTSAX is comprised of over 3,600 companies. And so not all of those companies that are within the VTSAX index fund took losses. So the only thing that was lost on Friday from VTSAX is 9 cents. Unlike, let's go to Nvidia. Nvidia's single stock went down $2.64. Again, VTSAX, it costs a little more, like $17 more than Nvidia, but it's a lot safer investment because your money is spread amongst those 3,600 companies and not into that one individual stock like an Nvidia. But I just wanted to point that out. It only went down 9 cents, and VTSAX is comprised of 3,600 companies. Large cap companies like Amazon, Nvidia, mid stock cap companies, small cap companies, micro companies. It's all jumbled into this one index fund, which is managed by Vanguard. Is very, very safe. And let me see, how much do they have in assets? They have $1.72 trillion with the T. Trillion. It's safe, people. Over the last 10 years, it has brought back 178% return. So that's pretty much 17% a year over the last 10 years. Did I do that right? Right. Okay, SPLG, which is the S&P 500 ETF, it went down the same, 9 cents, because your money is spread amongst the 500 largest companies in the United States. Again, Amazon, Nvidia, Microsoft, Google, is Tesla, I think Palantir. Yeah, so you don't have to like try to pick the right one stock. You can invest your money into these types of funds, and you let the managers of these funds, Vanguard, Fidelity, you let them manage the stock or the index fund. You know, if a company's not performing well, they'll pull it out and replace it with one that is. Fairly easy. And then, like I said in previous videos, The stock market on average for the last 100 years, well, not just the stock market, but the S&P 500. So if you had been investing into, let's say, the SPLG S&P 500 ETF over the last 10 years, you would have gotten on an average at least 10%, because the S&P 500 over the last 100 years has brought back a return of 10.628% returns. You're not going to make that type of money in your bank. Why do you work so hard for money and then you place your money in the bank that's stagnant, that's not doing anything, it's not gaining any interest? Why does it get to relax? Put your money to work. You do what the wealthy do. Now, while we're here, it's not all about money and gaining wealth, but you do need to be able to take care of yourselves. So it's like there's been a game and a process and procedures that have been put in place by those that control the wealth in this country to maintain their wealth. So in order for you to take care of yourself and your family, you need to do what they do. You may not get what they get or what they have currently, but you need to understand, like, the wealthy didn't just become wealthy yesterday. This whole get rich quick thing, it may happen to some people, but be careful what you ask for, because when you get it, you may not actually know how to handle it, and then you lose it all. But either way, wealth that's built over time, in my opinion, is the best type of wealth, because you learn how to manage it, and then because you're learning how to manage it, you've stuck to certain principles, you've disciplined yourself, and then so when you have kids, you're able to teach your kids what you've learned. And then you can continue when you roll up out of here, because what's certain, there's the beginning and there's the end. There's that first day when we get spanked on our ass by the doctor and you start crying, you take your first breath, and then there's going to be a day where you're going to take your last breath. It's inevitable, right? So that little space in between, how do you plan to live it? Are you planning to live it at its, at its best? You taking advantage of situations, learning new things, putting yourself in uncomfortable positions in order to get the things that you want? Or are you just going to remain a victim and think that, life just sucks and you don't deserve anything? Or are you just going to play it safe? It's up to you. The choice is yours. And that's what I've learned, is that, it's up to the individual. And those that want to do better will do better. And those that don't, won't. And I have to be okay with that. For some strange reason, I thought everyone was looking to do better, and I quickly learned that's not the case. And I would say I came to that realization even more so this weekend, based on conversations that I had with several different people starting on Friday. And I was like, oh my God, I have been wasting so much time and energy on certain people when I wouldn't say I wasted too much time. I should have just minded my business. Mind my business, like mind your money business. I should have just minded my business and not assume that everyone wants what I want. So either way, yeah, SPLG, S&P 500 ETF went down 9 cents. FTEC, Information Technology ETF, which comprised of about 290 something companies, information technology companies, it went down $1.38. Apple, I'm sorry, I plucked one. It actually went up 27 cents. That's a good thing. Tesla's doing good. Like, I was looking at some stuff regarding Tesla earlier today. It's like, I think Tesla's like creating some type of mobile homes or like RV type vehicles. I don't know if that's true, but I know that they're expanding their SpaceX mission, like the Starlink, Wi-Fi internet capabilities. But Tesla went up $6.24. Tesla is booming. I remember when Tesla, I don't know if it was early this year or late last year, it was trading at like $215, $229. But now it's at a whopping $260. So good for Tesla. Microsoft went down $3.29. but it's still $428 a share. It's not a cheap stock. And just because these prices went down or the stock went down does not mean something's wrong with the company. It's just based on the market yesterday, I believe, because not everyone's back into the market. Not all of the average investors like myself are back in the market yet. So I believe Wall Street is taking back gains that it has made, on these stocks, like an Nvidia. Like there's no reason for Nvidia to be down, but the stock price has gone up because Nvidia currently is trading. It went down to $121, and again, remember, just August 5th, the stock was trading at $90. So now it's up $31. And just think, if you have millions of dollars invested into Nvidia, right? And it's gone up $30, that's a lot of money, a lot of profit for a lot of these hedge funds and these Wall Street investors that are managing millions and billions of dollars. So they're taking their profits. And when they take their profits, the stock price may go down to a couple of bucks or a dollar here and there. Yeah. So the September effect is what I want to talk about next. Because I've said in previous videos, September is known to be a month where the stock market does not do well. History has shown during the month of September, the stock market does not do well. But this month is different. And I say this month is different because a rate cut happened this month. And because a rate cut happened this month, things have kind of turned around. So let's say, what day is Monday? Oh, freak. Either way, I think Monday is the 30th, right? The 30th of September. So let's say we close out, the month of September on a high note. That's different. That's a good thing. And I believe a lot of the profits that have been made in September is because of the rate cuts that took place on September 18th. Like leading up to that point, things were like not so good, not bad, but not good, So I want to talk about the September effect definition, stock market histories, and maybe some theories. So what is the September effect? The September effect refers to the historically weak stock market returns observed during the month of September. In fact, September has been the worst performing month on average going back nearly a century. The September effect is a case of a calendar-based market anomaly in the sense that it occurs without any real causal link or event, challenging the efficient market hypothesis. There is a statistical case for the September effect, depending on the period analyzed, but much of the theory is anecdotal. In recent years, the median return for September has actually been positive, right? So understanding the September effect, from 1928 through 2023, the S&P 500 index has averaged a decline during the month of September, but that's not the case for this month. So that's a good thing. This is, however, an average observed over nearly a century, and September is certainly not the worst month of the stock market trading every year. In fact, for some years, September has been among the best performing months, and this month hasn't been that bad. So moreover, while the average return for September is negative, the median return for the month has turned positive. But again, there is a thing called the September effect. So while the September effect might present a market anomaly in the sense that it violates the assumption of market efficiency, the effect is not overwhelming, and more importantly, is not predictive in any useful sense. This is because the time period under consideration will matter a great deal. Like, this time period is different. This time period has companies like Nvidia, MDA. No, not MDA. I'm thinking about work. I meant AMD. I had the letters. AMD. You have Palantir that's just been added to the S&P 500. You have Meta. You have Microsoft. This year is different, because again, they're saying AI is the new industrial revolution that is going to change things moving forward. They're saying AI is going to be involved in the pharmaceutical industry. AI is going to be involved in the transportation industry. AI is going to be involved in the technology industry. AI is going to be a part of everything moving forward. That's why NVIDIA is such a big company, because they're leading this movement. NVIDIA controls about 80% of the AI movement in the stock market right about now. You have companies like Meta, Microsoft, spending billions of dollars buying these chips from NVIDIA, to improve their platforms. Like Meta, again, if you haven't heard about it, or if you don't know anything about it, you need to Google the metaverse. Like Meta, Facebook, which is now called Meta, they're creating something called the metaverse. And they're needing the AI technology in order to do this. So back to the article. For instance, if an individual had bet against September over the last 100 years, that individual would have made an overall profit if they had bet against it. And normally the people that bet against stocks on a day-to-day basis are day traders. And I'm not a day trader, because to me, I think that's like a full-time job, and I don't have the time and energy to put into it. But either way, if the investor had made that bet only since 2014, though, that investor would have lost money. So the last 10 years have been different. Okay, why the September effect could exist? It is generally believed that investors return from summer vacation in September ready to lock in gains as well as tax losses before the end of the year. And I would say that is probably true. Possibly. I don't know. I haven't done it. I don't do it. But this is what the article is saying, that's written by professionals. Right? Because again, I'm not a professional. I'm not a professional stockbroker. I'm not a financial advisor or financial planner. I'm only sharing my thoughts and reading articles regarding the stock market and sharing my opinion. If you are looking to invest, please do your research or contact a professional that can help you invest your money. Okay, there's also a belief that individual investors liquidate stocks going into September to offset schooling costs for children. Another theory suggests, not a fact, but theory suggests that since investors expect the September effect to happen, market psychology takes hold of the sentiments turns negative to align with those expectations. So just know that, investing money is very psychological. Not in just a negative way. Just think like me as an average investor, when I invest my money and I see like losses every day, it affects me. It makes me want to take out my money, if I didn't know what I was doing. In 2022, I was only 2 years into investing, and because everything was red, I was like, okay, I stopped doing my dollar cost averaging when the stock prices were going down, which was a bad mistake. But I was new. Now I know better, right? So just because, things are bad and you have good growth stocks that are going down in price, now I continue to buy regardless. Or I may take some money that's in my bank account, some cash reserve money, and pour it into the stock to buy more, because I know over time that stock price will continue to go up. At least based on the research that I do on the stocks that I invest in, that's what I believe. Will it happen? That's my bet. If it doesn't happen, I have to take my losses. And if, the reports are coming out that, the company's not faring well, then I will have to sell what I've lost. Well, sell the stock, take my losses, and take whatever money I have remaining and invest in something else. But again, that's why you should Do your research and invest in good growth stocks, or just invest in the S&P 500 or VTSAX, because VTSAX covers the whole entire stock market. You don't even have to pick a single stock. Just invest in VTSAX. That's all you have to do, right? Okay, going back to the article, because I talk a lot. Yet the September effect is largely discounted by economists as irrelevant, and that if it did once exist, traders will, with knowledge of a anomaly, now act in such a way as to make it disappear in practice. In addition, frequent large declines have not occurred in September as often as they did before 1990. One explanation is that investors have reacted by pre-positioning, that is, selling stock more in August. You remember in August 5th, they called it Black Monday. Like, stocks were really being sold off like nobody's business. And we were trying to figure out what was wrong. And I equated it to stock market investors, hedge fund investors, these people that control millions and billions of dollars, the top 1-10% that control majority of the stock market. They were selling their profits. Then the stock price will run up again, and then the next week it will start to decline. It's like market manipulation. Why they do that? I don't know. Are they doing that? I don't know. But do I believe they're doing that? I do. But that's just my opinion. Okay, the October effect versus the September effect. Because, well, this year is different. Because remember, elections are happening in the U.S. in November. So there's no telling what to really expect leading up to the elections in November next month in October. But let's see what the article says. Like the October effect before it, the September effect is a market anomaly rather than an event with a causal relationship. It suggests that the month of October too is a negative month for the stock market. However, October's 100-year history is in fact net positive despite the month of the 1907 panic. Black Tuesday, Thursday, and Monday in 1929, the Black Monday in 1987. But we had a Black Monday August 5th, 2024. Yeah. But September has seen an equal amount of disruption. It was the month when the original Black Friday occurred in Why everything negative is black? I just realized that they keep calling like everything that's bad black. You ever notice that? It's all psychological, people. It's like devil's food cake is black. Angel food. You get either way. It was the month when the original Black Friday occurred in 1869, and two substantial single-day dips occurred in the DJIA, the Dow Jones Industrial Average, in 2001 after 9/11. Something calls that 9/11, and in 2008 as the subprime, remember that crisis ramped up. They shouldn't have been giving those loans out. But either way, like the September effect, the presence of October effect would depend on the time period under consideration. And I would say like this time period is kind of because elections are in November. So it's all about what the candidates are saying. And they could say one thing during the week, and the articles that are going to be posted on the financial websites are going to say because President hopeful Trump said something about China, that's the reason why the stock prices went down, or candidate Harris said something that drove the stock prices up. I'm going to continue the dollar cost average in. Okay. So what has been the worst month for stocks? This would depend on the time period you look at. But overall, over the past century, September has been the worst performing month for stocks, losing around 1% on average. But this September, things are pretty good. So are stocks always down in September? No, stocks have been down in September 55% of the time since 1928, making it just slightly more than a 50-50 chance of showing a negative return for the month. Not bad. So the bottom line, this is almost over, folks. The September effect is the supposed market anomaly whereby stocks turn negative in the month of September. While it is true that September has been the worst performing month and most frequent negative month over the past century, the time period under consideration matters a lot. This time period is different. They cut rates on September 18th. AI is like on the incline, you know. So I would say this month is different. In fact, if we look further back to the 1800s in the US or the 1700s in the UK, there is no September effect at all. As with all anomalies thought to occur in the stock market, the reality is that they likely do not exist, since markets do tend to be efficient, especially once anomalies are identified and publicly known. As such, one should probably not use the notion of the September effect to make trading decisions. That's why you need to get into the market, dollar cost average into the market, invest a certain amount of money into your good growth stock, blue chip funds, and keep it moving. Regardless, keep it moving. Pay attention to the reports, do your research, invest your money. Or you contact a professional and you have those individuals invest your money for you. And trust me, they're going to, well, they should be investing your money so that you can make money, because as you make money, they make money because they're managing your funds, the money that you're giving them to invest into the stock market. So yeah, so I just wanted to cover that. Sorry for the late video. Well, no, I'm not sorry. I got lazy. You know, things happen. I just got lazy on yesterday, and then I worked out, and then I just wanted to relax. And then I was thinking, like, you know what? I don't even need to do these videos. But then I was like, no, I had to remind myself on why I started doing these videos in the first place. So you all can, like, those of you that may see this video and get to this point in the videos, now I'm at 32 minutes. You know, sometimes you start something and then, you know, you start second guessing yourself. So I started second guessing myself on yesterday, and I started thinking all these negative thoughts, like, why am I doing these videos? I don't have to do these videos. What's the point? You know, a lot of people aren't investing. They're not interested in investing. But I had to remind myself that I started doing these videos not just for other people. I'm doing these videos for me as well, in order for me to stay on top of the stock market, to make sure that I'm doing the research that needs to be done. And then, you know, it just makes me feel good to share it. But then at the same time I'm sharing it, like, I just read the September effect, and I read the stock market review from Friday, because I didn't read it on Friday. I didn't read it on Saturday. It's Sunday evening my time. It's 6 p.m., 6:15 p.m. here in Guam. So, you know, it forces me to continue to do the research. And this is one way that I hold myself accountable, by posting these reviews on YouTube. And then if anyone gets to see them, or if anyone reviews them or watches the video, yeah, they too can learn something. But you can't continue to sit on the sidelines, people. If you're interested if you are interested in investing, start. Dollar cost average in. I talked about that in a previous video. Lower your debt to income ratio. You got to get out of debt, people. You have to manage your debt. You have to manage your debt. Get out of debt. Get out of that personal loan. Get out of the student loans. Get out of those car loans. Just the money that you owe family members. Get out of debt, because the more money that you have, the more money you can invest. More money that's not going into depreciating assets like a car, you know, or clothes or trips. You know, You can live your best life when you get older. You don't have to live your best life in your 20s. You're young. You're just starting to live. Why are you trying? But either way, do what you want. Just start investing, people. All right, you guys take care. Peace.